Welcome back to Stocklabs, everyone, for another market recap. We're basically at the tail end of, or we're going to be finishing up June, and with that, the midpoint of the year. So second quarter's coming to the end. It was a pretty soft week for markets. I mean, we're kind of expecting some more choppy action. We got some overbought signals the preceding week, and yeah, I mean, market kind of just stalled out a little bit this week. Nothing too crazy, but sort of the up only action ended. For the index performance, we've got S&P down 1.43%, Q's down 1.46%, so about 1.5% losses on the two main indices. Dow was down 1.7%, and IWM was the worst performer, down 3% for the week. Credit was also a little soft, down 1%. Bonds outperformed, up 0.7 for the week. And crude oil was down 3%. So crude oil doing this familiar pattern of up, down, up, down, up, down. No upside momentum there. And yeah, so overall kind of soft, but also somewhat expected after the run that we had and the sort of overbought nature of the market. The sell-off was pretty broad. So if you look at the industries, everything was down. There wasn't any sort of pocket of strength anywhere. Median tech stock down 3.5%, so even underperforming the Qs. Basic materials also a pretty poor week, down 3.8%. Healthcare down 2.7%. Utilities down 3.4%. And the rest down about 2%-ish, 2.5%-ish. Kind of overall, the median on a median basis, stocks were down worse than the indices themselves. So on the upside, subsector wise, we didn't really have anything show up. So like I said, no real pockets of strength in the market. Just sort of a general pullback, off the highs. On the downside, we have a few sectors here, EVs especially poor, down 10%. I mean, EVs generally, it's a volatile group. A lot of it is heavily cued off of what Tesla does for the week. Semiconductors also down. Let's see. This is the only semiconductor I see subsector wise on here. Gold down 5%. That reminds me, leadership stocks were okay. A couple of them were up. So Amazon was up 3%, Meta was up 3% almost, and Apple was up 0.9. Tesla only down 1.5%. So kind of weird that EVs got hit that hard. Tesla kind of hung in there, just normal NASDAQ performance. Netflix down 1.8, Microsoft down 2. So overall, this group was relatively strong, basically flat, all things considered, even though NASDAQ had pulled back 1.5-ish%. If we go back to the industries page on the, sorry, I need to go back to week to date. And on the downside, okay, cannabis is always a loser. Chinese burritos are always, way up and down. See some regional bank stuff starting to creep back in, leading the way lower. So keep an eye on if something under the surface is brewing over there. But regional banks, they kind of enjoyed a little bit of a break from the nasty action they were having a couple months ago. But maybe that is starting to creep back into the market, so we'll see. Breadth on a market cap basis. Let's filter this by 1 to 5 billion. Down 3.4%, kind of in line with the Russell was down 3%. Mid caps 5 to 10 billion, down 2.4%, slightly better, but still not great. Large caps down 2.5%, so not great either. Expect these to sort of have more inline performance compared to, say, something like the S&P. Mega caps down 1.66%, so these kind of hung in with the overall market. And Terra caps were down 2%. So outside of the, again, mega cap tech stocks held up, more or less flat as a group, but Terra caps overall 100 billion plus, they sold off. So market was generally weak just across the board. Could just be a little bit of exhaustion, could be end of quarter rebalancing, some selling going on for sort of portfolio management flows. We don't know. And if we check intelligence for this coming week, okay, it's kind of sparse on here, but TQQQ is slated to be the best performer, up 5%. So that would coincide sort of with the NASDAQ making its way back up to the highs that it pulled back off of. And then we've got bear treasuries and we've got China bullish this week. So not a whole lot to pick from, but the fact that the Qs are on here is somewhat encouraging for continued bull thesis. And on the downside, what do we have? Okay, DRIP. So this is bear, oil and gas explorers. They are bearish. So bullish crude producers this week. LABD bearish. So bullish biotech this week. And retail. Okay, there's a bull retail ETF. So bearish retail this week. Bull Google is bearish. So bearish Google this week. And the Brazilian market is bearish. So not a whole lot to go off of either on this either side of the intelligence spectrum. I mean, Stocklabs kind of doesn't have too much of a mind made up on overall direction. I would say probably you can expect a little bit of follow through selling to start the week, and then just a rally kind of back toward the highs, especially on the NASDAQ. These overbought signals are, let me see, where was our historical overbought? It was on the Qs. On the Qs, what day was this? Second historical overbought, so 1, 2, 3, 4, 5, 6. So we've got like 4 days left on this signal as far as like where Stocklabs keeps track of the data from. So yeah, like I said, maybe a little bit like follow through to the downside early in the week, and then sort of maybe it won't be a V bottom, but then, I mean, I don't think the bears really have a lot of juice here. I mean, especially in these summer months. VIX is like, I mean, it had an okay, I think it closed the week okay, but the VIX is generally dead over the summer. So I would expect the market to sort of find its footing and then start walking back up again. Maybe breadth will firm up some, and then you'll see some more upside action in the back half of the week. So yeah, that's pretty much it. More or less a normal pullback so far. I mean, most would call it healthy. Sort of gives people a chance to catch their breath, decide where they want to go from there, reload or whatever, and then continue the existing trend if the trend is still in place. So that's it from me. Hope you guys have a good week. Enjoy the summer. Stay out of the heat. And back next week. Talk to you later. Bye.